Hi, this is James Zhang with Full Capital, and I've got Joey.Murry here with me to talk about a new deal. Joey, thanks for jumping on.
Absolutely. Very excited to share this deal.
So before we get started on this deal, maybe jump in and give people a little bit of your background, and then maybe your 2 cents on what's going on in the market right now.
Yeah, absolutely. My name's Joey Murray. I've been with Marcus and Millichap for about 5 years. I'm on Nick Llewellyn and Barb Hoover's team. I work in the 75 unit and under space for DFW. Prior to Marcus and Millichap, I was in corporate real estate, doing more tenant representation, working for national portfolio type transactions. So multifamily kind of brings me full circle. But yes, from the market standpoint, we're seeing still a whole lot of attention and a lot of competition on these deals. Continued cap rate compression, but as the market is changing from the debt standpoint, it would be interesting to see how much rent growth continues. But overall, rent growth is definitely pushing this market.
Yeah, I mean, yeah, we're seeing that across the board. I think people have to underwrite a little bit higher interest rate nowadays, and then they're hopefully making that up on the rent side of the equation. So let's jump into this deal. So Arbor's off the square, so 40 units in McKinney. So give people a little bit of a background of sort of where this deal sits in the submarket.
Yeah, McKinney is a great market. This location is in the historic downtown area. It's just a couple blocks from the square, where they have a historic hotel and lots of bars and restaurants and shops. So it's kind of become a local kind of staycation destination, but it's seen a whole lot of growth in the past 10 years. So this location is only a couple blocks. You can walk over to this area. But not only that, the school districts in McKinney are really good. So some of these tenants are definitely utilizing that as well.
All right. So let's jump over. All right. So we're sitting in McKinney. You can see the distance to downtown, and then just sort of where it sits, pretty much all the growth in DFW on the Dallas side is going north up along Tollway and 75. So this is, you're crashing into McKinney and it's pushing past 380 and all that stuff. So maybe talk about the actual property and what the seller has done on the property in terms of upgrades and exterior.
Yeah, so it's a 40 unit deal, 1966 vintage. It's individually metered for electricity, master metered for water. They have already implemented the RUBS program. As far as HVACs, it's all individuals. They are on the roofs, also individual water heaters also. So it's a strong property from that standpoint. And he's done a really good job on the exterior of the property. They've got pergolas and outdoor grills and a very clean swimming pool. They've painted the exterior and replaced all the windows. And from the insides, that's where you can definitely add some value also on this deal. But they have done a phased-in renovation. So some of these photos, you'll be able to see that you have some vinyl wood flooring and two-tone paint and painted cabinets. All the units have granite countertops and stainless steel appliances. On 7 leases, he has gone back and put in backsplashes, replaced the cabinet doors with new shaker style, and put in new pulls. Also an upgrading lighting package also. So for a $3,000 Capex, he's getting $200 to $300 a month in rent bumps.
Okay, so on let's call it 33 units here, those are already vinyl planks done, granite's done, but on these upgraded 7 additional, you have these sort of cabinets with the backsplash here.
Yeah, that photo in the bottom left corner, you can see that backsplash and a little bit of detail on those shaker cabinets.
Okay. Versus sort of the older, just no backsplash, no counter, no cabinet, nothing,
Correct.
anything. Okay. Got it.
Correct.
All right. So they're seeing rents closer to 1,500, let's say on the two bedrooms, and then versus sort of in place is like 1150. Is that right?
Correct. Yes.
Okay. And then I guess anything else that new buyers should sort of budget for in terms of capex besides the interior upgrades?
Yeah, I mean, I think it's always good, especially on an interior or individual HVAC and individual water heater. Probably assume 10% a year you're going to replace those. You can kind of throw that into your budget. There is an opportunity here to increase income with parking for reserve parking. They're already numbered, but they're not charging for any of it. If you didn't cover the units, you probably look at around a safe number would be $25 a space. If you did want to go in and do a cover, you could probably get more. And so if you wanted to put that into a CapEx budget, assuming carports, I think that there could be a positive there also.
All right, so additional parking, maybe covered parking. And then so they manage it, they self-manage the deal right now with a property manager and part-time maintenance guy, right?
Yeah, there's a part-time on-site property manager and a part-time maintenance guy. There is a leasing office, so from 10 to 2, that part-time property manager sits in the leasing office. But overall, it's self-managed outside of that.
Okay. All right. So here's some of the, upgraded interior plan, and that's where majority of your pop is going to come from on this deal. I guess talk about the rent comps and maybe in that submarket.
Yeah, they've done a pretty strong renovation here. You definitely can consider this maybe not from the vintage, but from the renovation, a Class B product, definitely. So you're looking at rents from a 1980s product or renovated 70s product deals, and some of those are going to be in this rent comp survey that you see here. The patios of McKinney is a 1960s product deal. They're getting $1.97 to $2 a foot on rent. So that one's a 1960s product deal also. So you can see where his rents lie here. On the renovated ones, obviously he's around $1.86. You can see that on the two bedrooms. The non-renovated, he's down at $1.44. So there's still quite a bit of meat on this bone that you can go in and add value.
Okay. So most of the 70s, 80s product in McKinney, you're, let's say, 1280 to 1350 on ones, and then 14 to 1800 on twos. Okay. And yeah, I mean, I think a lot of these properties are probably going through similar programs. I know most of these deals have either traded or hands a couple of times in the last couple of years. So I think these rents are probably going upward from here.
Yeah.
So maybe talk through the historical versus where you think the pro forma can take us on this deal.
Yeah. So I think just like a lot of deals that we're seeing in the market, um, you know, he's proven the concept on 7 units here, but a lot of the rent growth has started kind of late last year and it began to show itself, but we still have several months here until all the current leases renew. So there's still a considerable amount of rent that hasn't come in. That's a huge upside for a new buyer that's buying currently. They're going to see all that renewed revenue come in. So we tried to budget for that, not only from a rent growth standpoint, but also you can see here on the historical, we have a pretty low loss to lease at 5,200, and we're gonna push that up considerably when you start raising rents on the pro forma. We push that up to 67,000. Also, he has real low vacancy credit loss at 13,000. Whenever you start pushing rents, you're going to naturally see that tick up a little bit also. So we pushed that on our pro forma to 32,000. But overall, His other income, we kind of kept that steady. We
Okay.
didn't push that up too much.
All right. And then, so on the revenue side, really just the interior upgrades is going to push the income up. And then on taxes, sort of reassessing the taxes. And then potentially, depending on how you're going to do management, you put in a management fee of 5% down here, along with probably a part-time maintenance, part-time property manager on the deal as well.
Correct.
Okay.
The part-time maintenance and part-time payroll or property manager would stay on. So in this case, there is an opportunity for a new buyer to keep the current system in place. But assuming a part-time status, we reduced the payroll a little bit, but we kept the management fee at 5%.
Okay. And then do you guys have a whisper on this deal so far?
We think we're whispering around 6.7 million.
6.7. Okay. All
Yes.
right. So, when you go through this, there's a couple ways to look at it. I mean, you have sort of your standard Fannie and Freddie loans, which, I mean, this deal, I mean, it's well occupied, it's performing well. So it's about $4 million right now. So depending if you go Fannie Mae or Freddie SBL, your rate right now is probably 4.5 to 475 on a step down. And then if you want a little bit more leverage, we're seeing some people take either a recourse or partial recourse loan on these deals, and you're able to get 425 to 4.5, and it's at a higher leverage, right? So you can get up to 75%. We've seen at at the whisper price at 75%, depending on your rehab budget. Whether it's 100 or 200,000, get some of that rolled into the loan. So it's going to have 425, 4.5 with a step down. And so we're seeing a lot more people on these smaller deals get recourse bank loans on these transactions, because number one, they close faster, but then the rates are actually lower than Fannie and Freddie, which is what they're supposed to be all the time. But when that 10-year treasury dropped a lot, there was a weird time when Fannie and Freddie was actually lower than bank recourse loans, but now that's getting back to normal. So this deal's been out for maybe a week or two. Have you guys set a call for offers date, or what's the timing on this deal?
We haven't. We're still working through tours, so we want to make sure that everybody that's interested in the deal has an opportunity to tour the deal. But typically that will shake out probably in the next 2 to 3 weeks. We'll get a call for offers set. Kind of just a high level, we really think that there's a lot of meat left for this deal. The 5-year IRR at that whisper price is around 35% and around a 3.5 rent multiplier. So there's a strong return there left for the next buyer.
All right. Well, I appreciate you coming on, Joey, to talk about this deal. And, if anyone's interested in the deal, definitely reach out to Joey, set up a tour. I'll be out there this week, just touring with a couple buyers as well. So if you have any questions, definitely reach out to him on the property side, and any questions on financing the deal, please let me know. So thanks a lot for coming on, Joe.
Thank you. I appreciate it.
All right. Thanks.